Welcome to the Finance News Network. My name's Jessica Amir. Today I'm with Charter Hall Long WALE REIT Fund Manager Avi Anger. Avi, welcome back.
Thank you, Jessica. Thanks for having me.
So for those who aren't familiar with the Real Estate Investment Trust, the CLW, just give us a quick introduction.
So Charter Hall Long WALE REIT is a listed real estate investment trust. We're an ASX 200 entity, and the focus of the REIT is to invest in long lease property leased to high quality tenants on long leases. The aim of the trust is to provide income and capital growth for our investors over the long term. So our total assets under management at 31 December is approximately 1.9 billion, and our market cap is about 1.2 billion Australian.
And you've just handed down your first half 2019 results. Just take us through some highlights.
Highlights for the period is we delivered earnings per share of 12.9 cents per security for the half year, and we're on track to deliver our guidance of 26.8 to 26.9 cents per security. Our cap rate across our portfolio is about 6.2%. Our average rent reviews are 2.8% per annum. And what that means for investors is that we're able to deliver income growth with that 2.8% coming through on our leases on average. And our cap rate is very attractive at 6.2%. Relative to what you can buy in the physical market.
You've had a very busy first half, undertaking a lot of transactions. Just give us an update on what's been taking place.
During the half year, we completed $666 million of transactions. There was $492 million of acquisitions and $174 million of divestments. Those acquisitions are diversified across sectors, office, industrial, retail and agri-logistics, and provided all those acquisitions on average were a 14-year WALE, which helped increase that WALE for the half year to 12.6 years. Importantly, the vast majority of those transactions were secured off market. So the benefit of our management platform has helped us secure those really high quality opportunities for our investors.
Thanks, Avi. Now can you give us an update on your properties and the tenant profile?
The tenant profile of our REIT's quite unique. We have very high quality tenants across our portfolio, with over 95% being ASX listed, credit rated or multinational companies. Approximately 20% of our portfolio is leased to government, and about 60% of our portfolio is leased to non-discretionary grocery providers such as Coles and Woolworths. Our portfolio is split across property sectors with a combination of office, industrial, long lease retail and agri-logistics in our recently acquired Ingham's portfolio.
And you mentioned you've got some new major leases in the Ingham's portfolio. What impact will this have?
We acquired a portfolio of 27 properties that were leased to Ingham's for approximately 15.8 years. That acquisition was completed in December. We announced on Friday that we've now extended some of those leases in that portfolio. So the average lease term in that portfolio has now increased from 15.8 years to 24.6 years, which is a really great outcome for us. And what that means is that the overall lease expiry profile of the REIT has increased now to 12.6 years at 31 December.
Just a more general question now, Avi. What are companies that enter long-term leases looking for?
Look, I think companies are looking for landlords that they can work with in a cooperative and collaborative manner. So we at Charter Hall have very strong relationships with a number of the major tenants in my REIT, including groups like Coles, Woolworths, Ingham's, for example. ALH Hotel Group is another group where we own 58 pubs in a joint venture that are leased to ALH, and we've been able to work with ALH to acquire new properties and extend leases the same way that we've done on the recently acquired Ingham's portfolio. And I think companies want to work with landlords who they can have a really strong relationship with. So for us, we're able to extend leases, and given we're a long lease REIT, that's important for our investors to be able to deliver that. And for the tenant, they're able to work with a landlord and that they can get on well with and really manage their businesses in an optimal way.
And just lastly, what's your guidance for the full financial year?
In December, when we acquired the Ingham's portfolio, we provided updated guidance of 26.8 to 26.9 cents per security. And today we've reconfirmed that guidance, so we're still on track to deliver that 26.8 to 26.9 cents per security. That represents a 1.5 to 1.9% increase over our FY18 result. It's a really positive outcome, and we continue to deliver earnings growth to our investors.
Avi Anger, thank you so much for your time and well done on your results.
Thanks, Jessica. Thanks for having me on today.